Hello folks, this is Raj Sastry from Raj Option Trading. Today I want to talk about heavily shorted stocks. Today is April 3rd, 2021. So with that, shorting a stock means you're borrowing a stock, hoping that stock price will fall down and you can make a good profit. In this scenario, if you borrowed the stock at 50, stock fell off to 22, you would make around $28 or so profit. So that's why people are shorting the stock. So let's see what are the heavily shorted stocks. There are various ways to play this. Let's look at some of the heavily shorted stocks and see what we can do. So with that, here are a couple top shorted stocks. We'll go into a little bit detail and take it from there. So these are the top shorted stocks. From a if I have to buy some of these stocks, I would look at the stocks which are really good from a fundamental perspective, and stocks that have got low RSI or relative strength index. And I also make sure there is a good quarter over quarter sales growth. So basically, I look for some of these fundamentals, even things like gross margin and a little bit lower price to sales ratio. So with that, this list is organized by the short ratio or float short. And the one at the top here, 180 Life Sciences, has got highest short ratio, which is 65.17. And from there, it's a descending order, as you can see here. And I've highlighted some stocks here which I like to see as a buying candidates. I would buy these stocks because these are heavily shorted. Companies seem to be fundamentally solid, and it's got RSI is relatively low. So with that, the ANTF, Blink Charging, Clovis, fuboTV, Clover, the list goes on. The ones in the highlighted ones are my favorites. And let's go to the next slide. We got some more here: Workhorse, BTAI, Sorrento, Parts.com, Arkimoto. So with that, let's go into a little more details and see why we need to buy these stocks and how can you profit from it. So with that, let's look at a couple of charts here. First one is ANTF. As we talked about, stock has fallen off the cliff, as you can see here, and now it's got its mojo back a little bit, and fell down again, went back up, fell down, went back all the way up, fell down. I think they also had earnings. So at this point, you can see here it's been doing kind of higher highs, as you can see here, and lower highs. So with that in mind, I feel like hey, this is a fundamentally good company. They got quarter over quarter sales growth, so this has a chance to go up again. Especially with any good news coming in the stock, it can go up. So that's why I like to probably buy the stock a little bit and hope for a good raise in the stock price because it's fundamentally solid company. I don't mind holding the company for a little longer. Next is blink charging. This also, as you can see here, went up, down, up, down, up, down, up, down. So typically, if you want to buy the stock, I would buy it somewhere at around this price. I would even look for a little pullback, but that's okay. My hope is it's good company with President Biden. He's looking at the battery and efficient energy, so this might this has a good chance to go up. And it's got a little bit lower relative strength index, so that's why I feel like it's a good company to take it forward. So I would not buy when it's at high. If it's at higher level like 60 as an example, I would even buy a call option, maybe put option maybe 3 months out, so that way I profit from stock coming down. But once this come down, I would rather buy the stock outright, so that way I would participate in the upper movement of the stock. Next is FUBO, FUBO. Same story here. Stock has it has come all the way down. It's got a high short ratio, and relative strength index is 33, which is pretty low. So I would buy the stock here. I would wait for stock to make its way up, and take it from there, and hope for the shorts to squeeze out in the meantime. Next, let's look at Clover, CLOV, and this company, as you can see here, these shorts have pushed it all the way down here, went a little bit back up, came down. I would buy this stock. It's a low price stock. It's around $7.38. I would buy it, hold it for a while, waiting for short squeeze type scenario. Same story with the HUYA. It's kind of came down. It's one of these Chinese stocks which came down drastically due to this whole debacle last week with the Archegos Capital. I would buy at this price around $19, low RSI 30 or so, hoping that there will be some short squeeze and shorts will really start covering and buying the stock. Next is NNDM. It's a 3D printing play, and I think stock has came down so much. It's a fundamentally good company, a little bit higher valuation. I would buy this stock, low price, $8.33, and RSI is also pretty low. So I would, any good news in this stock will, result in a short squeeze, and stock will go up. Let's look at GoodRx. GoodRx is supposed to be very good prescription online prescription type company. I think it had an IPO last year, but stock has fallen down drastically, as you can see here. Fell down, gapped down, went up. It's all the way down now, trying to make its way up. So at this price, $39, and with the relatively low RSI of 46, I would rather buy the stock outright, and any good news, shorts will get squeezed. Next is BTAI. It's again one of these biotech play. As you can see here, up, down, up, down. It's got a pattern here. Right now it's all the way down. I would, buy some and keep it low RSI. So it's, good to buy at this lower price. And with its history, it will again make some highs. You could, there will be short squeeze and you can sell at the time. Workhorse, again, one of these EV play, and stock has fallen off the grace, as you can see here, all the way down. Now it's trying to make its way up $14. Very low RSI 39. I would buy some here and keep it, and look out for any short squeeze type scenarios. Same story is Sorrento Therapeutic. I think it's a $8 stock. This stock is also very notoriously famous with this short squeeze type play. Stock has been up, down, up, down. Now it's down. $8 stock. I would buy some and keep it from there. And RSI is also very low, so it's good to buy at this time. It's a oversold type stock. I would buy and take it from there. Next is parts.com. Parts.com is again one of these automobile play, and stock has been up, down, nice. As you can see, even though there are bumps here, really it's kind of making its way up, slowly but surely. It went up a couple of days in the past. I think it's okay to buy now, or if it pulls back a little bit, I would be a buyer. So hoping that it will make its way higher, maybe around say $20 or so, and we can make some good profit. And last one is FUV. Again, it's a good company, and it's fallen off the grace due to shorts. Now it's $13, and low RSI. I would think it will make its way back, and shorts will get squeezed. So in a nutshell, what if the chart is like this, where it's coming down? I would buy the stock outright, or if the volatility is low, I might even buy a call maybe 3 months out. But if the stock is at a high price, and somewhere here as an example, and there is a high short ratio, I would rather buy a put maybe 3-4 months out, so that way I participate in the lower movement of the stock. So that's how I like to play it. So with that, back to the list here. Um, so these are the top shortest stocks. Use your judgment. If the stock is already at a high level, you don't want to buy the stock. You'd rather buy the put option 3 months out. But if the stock is at a lower point, you could, and if the volatility is low, you could buy a call option 4 months out, or you could buy the stock outright. When you're buying the stock or call options, make sure company is fundamentally solid and RSI is low, and stock is at lower point. With that, thank you very much. Happy trading.